Hey, good morning, everybody. Let's remember, I'm here to help you improve your trading strategies, to share from personal experience, and to hopefully give you the light bulb moment. So, a post I made this morning: understanding the stock market is difficult enough, but we have certain tools to help us determine market direction, understand support and resistance. Right now, I just pulled up dark pool orders for the SPY. What was everybody entering yesterday afternoon? Puts, below bid, sweeping, below bid, ask. So I use this stuff to help me process the market yesterday. Same with net flow. You can look up for individual stocks and things of that nature. But more to the point, we can deal with interest rate. We could deal with possible recession. We can deal with the Fed and with a war going on between Russia and Ukraine. What makes it even more impossible, harder to deal with, is the fact that we have debt ceiling concerns. Because understand, if the U.S. doesn't come up, the Republicans and the Democrats, and pass a law to raise the debt ceiling, then the market could literally drop 9-10% in one day, followed by a 12% drop the second day. And understand, the deal has to get passed relatively soon. Okay. On the other hand, say the government, the Republicans, the Democrats, they get together, they come up with a proposal that makes sense, and both sides say, yes, we're going to sign off. What would the market do? Well, as soon as that news hit the wire, the market would shoot up 2.5%, 3%. So understand, it's extremely tough to trade this market. I'll tell you how I'm trading the market, but first, a couple of lessons and key points. Let's remember a few days ago last week when we were trading that tight range from 408 to 414, I said, do not be surprised if we see a 3% day. And we go from 413 to 421. Well, we saw it. We went from 412 all the way to just under 421 on the SPY. So the fact that we're sitting at 413 this morning shouldn't surprise everybody. We were trading 408 to 414 for 3 straight weeks. We had 2 days that pushed the SPY from 411, 412, all the way to 420, 421. So a drawback or consolidation makes sense. Now, here's another instance, okay? Yesterday, I saw a ton of Amazon puts being sold with January expiration at a strike price of 105. So a big institution is saying, by January, there's no way Amazon is under 105, and we're going to sell millions of dollars worth of puts. I mean, it was a big freaking number. At the same time, they were purchasing Amazon calls for themselves. So that isn't a hedge when you're selling the puts and purchasing the calls. So that's telling me Amazon bullish. But then I look at other stocks, maybe Meta or Google or even an Apple, that could have some type of drawback. So I'm saying, well, how's Amazon going to go up if Meta and Apple and Google and Tesla look like they have a little downward pressure and we're worried about the debt ceiling? That is a distorted, disconnected view. How can Amazon go up? And again, so please understand, this market is extremely tough to trade. Now, normally it's not that difficult. You see a bullish pattern on certain stocks or indicators, you can definitely play calls, right? You can sell puts. There are multiple ways to make money. However, with a debt ceiling looming and you have rhetoric from these politicians, the right side, the left side, it's their fault, we want to raise, they don't want to raise. I mean, it's all complete bullshit. And who does this play out on? The retail trader. So I figured, rather than giving you instant gratification today, because we're all here to improve our portfolios today, what is Matt going to tell me that's going to move my portfolio to a positive today? So my 3 lessons today aren't necessarily going to affect your account today, but if you remember these lessons, they're going to stick with you. And I will talk about certain things that will help you influence the market today. But the 3 lessons, and I've got one trade that could be a 10xer. I'll talk about my strategy. So number 1, be happy with what you have. We're all so disappointed. Man, I fucked up that trade. I could have secured profit at a much higher. My account should be up here rather than here. Yes, I'm green. So the first thing is, be happy with what you have. I've seen so many accounts out there that are down 99% from where they started. They started at 100,000. They have $982 left. Be happy rather than focusing on, shit, I lost that $99,000. Focus, I still have $1,000 to make that turnaround. If you're still focusing on the negative, right, which is human nature, I lost $99,000, then guess what? You're going to lose the final $1,000. Lesson 2, Stay true to your strategy. If you have a strategy, whether you're a bull or a bear, and you have a position and it's off 40%, but you have the time and you believe you're going to be correct, it's okay to hold true to your strategy. I mentioned yesterday, and this will go into my position later, but I was holding $236 worth of calls in ZIM. They opened up yesterday morning at $45. I didn't touch it. They finished the day at $188 or something to that extent. Again, I was off 80%. I went from off 80% to minus 20%. And I'll explain that trade, because that trade for me, if I'm correct, could be like a 10x trade. So although it started like shit, I wasn't going to sell at $45. I start each week with the same amount of money in that account, $249. Why? Because it limits my downside. If I'm wrong about a trade, potentially this one, I could lose $249 max. I can't blow up my entire account. Why? Because from that same account, I've withdrawn $6,200 this entire year. So even if I lose the $249 this week, say I have a terrible week next week, $249, I'm still net gain $5,700. Okay, the third lesson is prepare each day for both scenarios. You have your bull case scenario and your bear case scenario. Bull case scenarios, we dip, we rip. You know exactly what entries you're looking for on that dip. All right. Your bear case scenario, you're like, we're going to rip higher, we're going to reject, we're going to go down. We saw that yesterday. Know exactly what stocks you're looking to short or buy puts on. Remember, I mentioned Upstart the other day. That was squeezed and running. Well, great. When the market decided to flip yesterday, Upstart went from positive to tumbling down the mountain. So again, you're looking for simple day trades, simple strategies that are going to help you perform better in the market. Now, interesting information about the market right now. I took this from Cheat Codes. The number of stocks outperforming the S&P 500 has crashed to 1999 levels. What does that mean? It means that the majority of the stocks are not beating the S&P. You have few stocks, in this case, 29, which is the same level during the 1999 crash. All right? So there are only certain stocks that are pushing the market higher, and those are the big players, the Googles, the Amazons, the Apples, the Microsofts, et cetera, et cetera. All right, another one. I took this one from TrendSpider. Honeywell. If you want to be bullish something, it looks like Honeywell is holding above shelf volume. We talk about shelf volume. That means when a stock hits a certain level, there's volume that comes onto the market to push it under. Once it holds above shelf level, that resistance turns into support. So Honeywell, if I had to be bullish, I would look at that. Now, what happened overnight? We had the UK April core CPI, the same way we have CPI, Consumer Price Index, here in the States. We have it in every country. UK surges to 6.8% year over year. Estimate, we're at 6.2. Previous was 6.2. What does that mean? It means if inflation is going down in the UK, we just hit a little mountain and we're on the way back up. What would that tell me? Recession fears, higher pricing. What could happen? Well, that could resonate over to other European countries, not to mention over here in the US. So inflation. Now, what else worries me today? Jim Cramer says market action shows that Wall Street is not worried about the debt ceiling. Holy shit. Is Jim Cramer trying to F us all? I mean, that's the only take from that one. I mentioned CPI. I mentioned the lessons. Let's just see what else I wanted to share this morning. Okay, yesterday's market reaction. The S&P 500 erased $300 billion in market cap in 4 hours, from noon to 4 p.m. when the market turned. $300 billion. JP Morgan recommends shorting small caps. Now, generally, I ignore things that big banks say. But if we go back to 2 summers ago, I think it was May when JP Morgan told me they should short China. And what happened? China threw up on itself. And again, I was saying, no, I still see support for Chinese stocks. JP Morgan was right. JP Morgan is buying VIX calls, stating that volatility could be worse than 2011. Gold prices spiked above 2,000 again. VIX spiked to its highest level since May 5th. So again, we're only talking about 3 weeks of trading, but the highest level. Borrowing costs rise in the U.S., and the cash balance in our accounts sinks below $60 billion. So we're going to run out of money around my birthday on June 5th. So again, if I had to predict the market, I'm seeing they're buying Amazon calls, they're selling Amazon puts, Amazon bullish. However, market conditions, recession, debt ceiling, hard to trade. What does that make me do? It makes me want to get into an intraday trade and get out. So please, cash account. It means securing a proper entry into a position, even if you have to wait till 2 p.m., makes more sense than gambling at 10 a.m. or 9:45 when we're not sure of market direction. So I want to talk about my one trade that I have going into this week. This is the Robinhood account. The company is Zim Interactive Shipping. Zim, we remember it was a $60 stock, $56 stock, $40 stock. Well, shit, it is down to $14.28. Now, what do we notice about this pattern? In fact, let me see if I can pull up Zim so you guys can see it with me. Let me pull it up on TradingView. TradingView, where are you? Ah, here you are. Boom. All right, let's add it to the stream, and then let me find Zim. So we'll add it. All right, great. Halfway there. And again, now I'm saying this is my position. I'm not suggesting anybody follow me. I'm not shocked that it's off a little this morning. So let's look at the 1 hour chart. Zim canceled their dividend. So what happened? We had a drop from 18 to 16, from 16 to 13. We bounced from 13 yesterday back to $14. Now, what do I want to look at for Zim? I need to go down to, hopefully I can go down to like a 4 hour chart, show you guys a couple of weeks. Okay, there we go, 4 hour chart. No, I need a bigger chart than that. Stick with me, everybody. I promise it's going to get better. Let's go down to a 1 day chart. All right, so what we can see is anytime Zim has fallen, and I can show you on this chart, which is my 3-month chart. So let me pull up my 3-month chart, and then you guys will all look at me. But this is the current trade I'm in that I think could return 10x. Again, if there's no debt ceiling agreement, the markets are going to drop. This trade is not going to be successful. But here you go. Here's your Zim. So if you see the upper echelon points right in there, that's $24. Then you can see it drop to 19, then back to 24. Then it dropped to 18, back to 21. Point is, it drops and then it makes up about 20%. So I said to myself, it dropped to 16, it bounced to 18, it dropped to 13, technically 14 because that's where it settled at. What happens if we pick up about 22% over the next week and a half? Okay, market stabilize, get a debt ceiling agreement. So I said to myself, 22%, it's dropping to 14 and change. That's about a $3 move. Let's say it goes to $17.5, okay? Because we've seen in the 3-month period, we've seen a drop, a bounce, a drop, a bounce, a drop, a bounce, a drop, a bounce, and then finally another drop after they announce no dividend. Now, their dividend, quarterly dividend, is based on their earnings. They didn't have earnings this quarter. When they have earnings for the next quarter, and it might take longer, then they're going to pay a dividend. They pay a hefty dividend. So I happen to think that, there's a chance it goes back. Plus, they're located in Haifa. They're an Israeli company. It's like, I'm Jewish, but I know there's support for certain Israeli companies. We could look at NNOX, NNOX. When it fell to a certain level, it had support. So from $8, it's back at $20. It's almost like a pattern I see with these stocks coming out of Israel, that they have support. Now, I couldn't tell you who's buying the company, but I can tell you that a big position crossed over the wire at 9:35 yesterday morning and got me interested. So I said, if Zim bounces from $14 to $17.5, my positions, which I'll show you yesterday, started out at $45. Let me find this because it's a great picture. Hopefully I have it here. And, it just makes you not want to sell. Freak. Okay, here we go. Yesterday morning, this account from $236 started at $45 at 9:35 a.m. So what did I do? Well, holding my position, I said, I'm looking for 10x return on the $236. I'm definitely not selling. Where did we close on that account? 182. So still off 20% for the day, but certainly not down 80%. So that goes back to the lesson I spoke about earlier. Whereas if you have a position and you have time, mine go out till June 2nd, and don't scare sell when the market throws up on your stock and you're down 80%. Love had a trade like that the other day. She was off 70%. The next morning, the trade opened up 188%. So again, I'm not suggesting people follow me to this trade. I'm telling you my strategy is if I see the 20% bounce, which I've seen 4 times in the last 3 months, every time it dips, it pops. That's the trading strategy. If I'm wrong, bye-bye to my $236. If I'm correct and Zim goes back to 17 and change, that makes my 5 contracts at the $15 level worth $250. So for being worth whatever they are this morning, and they closed at, let's just tell you in a second, 23 cents. I bought these two contracts at $7 each yesterday. $7 and $7. They closed at $23. So I'm up 200% on that single bid yesterday. But the point is, Zim, I have 5 $15 contracts. They're only 23 cents. I bought them for $7 yesterday. If they go up to $2.50 each, well, then that transaction right there is worth $1,250. Then I have 5 at 15.5 that I paid $13 or $14. So I'm in for $70. If they go up to $17.5, those are worth $1,000. So again, my complete strategy, and if I'm wrong, I lose $236. If I'm correct, I'm going to 10x that small account. Now, each week, again, I start over. So if I don't touch that account this week, I could be riding this position until June 2nd to see if I'm correct. Won't start over at 249 next week. I will use a separate account. I've got a second Webull account. I've got another Robinhood account. I've got a Morgan Stanley account and an Interactive Broker account I use, depending on what I'm looking to trade. So I suggest you all do something the same. We'll get to some questions. I see them coming across. Let me just see if I had any other points to make. Again, UK inflation high. Today, we have FOCO minutes, meaning 2 o'clock. The Fed is going to release their information from the last meeting. It's nothing new. It's just going to be the notes from the last meeting. So I mentioned there are certain stocks that I would look to drop if there's going to be debt ceiling concerns. These are the same stocks that have been squeezing lately. So let me open up my watch list because I see Josh is saying, hey, Carvana, any thoughts? Yeah, if the market is bullish, Carvana is going to continue to squeeze. If the market is shit and there's no debt ceiling reached, then you know what one company is going to drop pretty hard? Yeah, Carvana. What else? So I've got Upstart in there. Upstart, which rode all the way. I mean, now it's down close to 2.5% this morning, but Upstart's been squeezing. And they finally started selling off with a little volume yesterday. It tells me if the market contracts, that Upstart could drop more. The fact that it's off 3% this morning tells me, okay, that's a start. If today's a red day like yesterday, and we'll talk about the ranges shortly, then I want to watch Upstart. Another stock, again, you mentioned Carvana. It's on my list. Let me just pull up Carvana because Carvana has the same type. Shopify had some pretty intensive selling. Carvana, which has been squeezing as well, okay, squeezing towards the upper end of the echelon after earnings, and earnings were not that great, could easily come down, just like Affirm Technologies. Okay, so I have a couple of stocks in my mind that I'd be looking for puts if I think the market's going to tank and if I think there's no debt ceiling agreement. So let's get to it. What about what do I think is going to happen in the market today? All right, so I go back to my chart here. I showed you guys we're trading 414 to 408. A couple of times we hit 404. We did that for 3 straight weeks. So the fact that we popped from 412 all the way to 420 and now we're back at 412, well, shit, you know what I do? I just wipe out these days. I wipe them out right here and we're back in this range. Yeah, those days, what do? We shot straight up, right? Straight up. We went from 411 all the way to like 421, slightly there under. So again, it's not a surprise. Oh, Palantir, which has been ripping higher and had support. That's probably getting hit hard this morning as well. Down almost 4%. Does it mean Palantir is a bad company? No. Institutions have been going twice as hard volume buying into Palantir. So does that mean you purchased Palantir today off 4% this morning? No, because if the markets take a tumble, Palantir will come back not to 9, not to 9.5, but it's going to find a new base. It's going to consolidate. So that's on my watch list on the bullish side, because I know that they're buying into Palantir at double the rate they were purchasing, dating back a couple of months, and that's after earnings. So let's look at, that's what I was going to do. I was going to pull up, man, did I not do it? I probably did it. Yep, there it is. Okay, so let's pull up, not Discord, not that. Let's pull up, here we go, Trade Ticks, and let's look at the SPY ranges. All right, so SPY range closed at 414. We're now at 412.41. Can you all see that with me? Thank goodness. Great. First thing I do, I go over to Discord on my other screen. No, I'm not showing you guys this because I can only share partial screen. I'm going to type in the dark pool levels for the SPY. Now, what I can see, and you probably can't unless you're part of Discord or maybe you're doing this with me, The largest dark pool level is at $411.42. So right now, I've got my SPY prediction for today. I am 100% sure we're going to touch that level of $411.42 at some point today. Now, what do I think? Well, since that's the largest dark pool level, it would not surprise me if we found support at that level. So again, coming up with my analysis for the market, I say to myself, if we touch that 411 number, 411.42, or even slightly there under by about 20 cents, let's just say 411 flat, okay? I'm going 411 flat on the downside, and I'm going to say, okay, on the upside, I think a 5-point range is acceptable after the volume that we saw the past, day and a half. I'd say 411 downside, 416 topside. Well, we closed at 414 and we're down pre-market. So I'm really looking to see, okay, do we have that support? Because I do think we're going to see that 411. So my most important level to pay attention to for myself is 411.42, which again is the largest dark pool level. And then I'm looking under that, 409.72, lighter level. 413.13 is the level above. So then I say to myself, okay, 413.13, let's check it out. Let's remove me real small. Let me just go to the chart. Where's 413.13? Let's go back to like a 5-minute chart. We're not going to see, so I need to go back to, let's do an hour chart. All right, so we got the hour chart, which takes us back to the very beginning of May. Having 1 month of data should be enough to really evaluate the market. So I'm going to type in key levels. Now, one of the key levels, we're sitting at 412.48. One of the dark pool levels, the largest level, used to be 412.72 right here. So it's subsequently dropped for 411. Let's get 48. 411, bump. That's close enough to here. So right at this level, I'm looking at support, and I'm going back to this day right here on May 10th, which is basically 411. I'm going back. Where are we going over here? Again, 411. We saw a drop here, a quick rebound. That's May 17th. Going back to this level right here, where we're at 411.42, just under 410.83. So again, I'm looking for support at this level. If we drop to the next level, then yeah, 408 is going to be in play. If we crash through that 411, and this is your bear case scenario, if we come crashing through that 411, then yeah, I think 408 is in play. It would have to be really red. McCarthy would have to come out and say debt talks stopped. If we see an announcement at noon that both parties were so upset with each other that they separated and ended talks for the day, that is a terrible, terrible scenario to play out, and the market will not like that at all. So let's talk about some questions here. In Bank of America puts, should I hold that? I like to look at the KBE for banking stock. I actually mentioned yesterday that I sold my Bank of America calls, but I wouldn't be adverse to re-entering them. Again, it's hard to take a position. If you tell me debt ceiling agreement, I would say Bank of America puts, I would stay the hell away. You tell me there's going to be a debt ceiling agreement, I'm telling you I want to be in banking stocks, okay? I'll be in any of the banking stocks, the small ones to the large ones. It's okay. However, no debt ceiling, the whole market crashes. It is what it is. All right. I heard there's debt ceiling talks today. Yeah. We heard they ended yesterday. I was like, well, what about Wednesday? Are there any talks Wednesday? Again, even though they're not scheduled, they are scheduled now to meet today. And even though they're not on the schedule to talk about it tomorrow, if there's no debt ceiling agreement, they will again meet tomorrow. They're going to again meet every day until one side completely blames the other side and the markets just blow up on themselves, or we get an agreement. Yes. Good morning. You got a good, you're in at 1540. You're in too high. My first buy on Zim was 1495, then like 1475. That was my first 100. And then my second 100 was at 1405. And then my third 100 was at 13 flat. So my average was 1393, which Zim being at 1426 is making me green. If you're just in with one position, again, I don't know how many shares. Okay, your other account is showing 1509. You're still too high. You got to ease into these shares. You want to buy 100 shares? Like me, 20 shares, 20 shares, 20 shares, 20 shares. We're not calling the bottom, and I'm not saying Zim's going to pop, especially if there's a tough day. But I'm assuming there could be some short covering. All right, again, Carvana, it's tough because Carvana, Upstart, Affirm, they've all been squeezing higher. We saw Rivian, even Lucid squeeze higher. Understand, if there's no debt ceiling agreement, all of these companies are going to face cold, hard facts. When the market's dropping, even stocks that are squeezing will go down. All right. So, again, that looks like questions for today. I'm looking at Zoom. I'm looking at Shopify to pull back. See, here's the tough thing. When I'm looking for certain stocks to pull back, and then there are other stocks that are being bought. So again, when I find the bottom today, I'm actually going to look at Amazon calls. That's going to be my play today. When I find the bottom, I know there's support for Amazon. So when I see the SPY, if it goes down to 411 flat and we bounce hard off 411, then I'll take some Amazon calls. If I see the markets go up first and we reattack where we closed yesterday, the fact that we're sitting probably at like 412.34, we reattack that 414 level and it rejects. Then I'll say to myself, if 414 rejects, then we are going to see that 411. If we don't see 411 in this morning, then I'm going to say, okay, we're going to see it later in the day. If 414 rejects, that'll tell me puts. So again, as I mentioned, one of the first lessons on the live stream today, have two scenarios. Bull case scenario. Your bull case scenario is, okay, markets dropped to 412 right out of the gate, 411.50. We see support. If 411.50 is the bottom side, then we're going to see 414, 415 on the top side. If we see that, know whether you want to get into SPY calls, SPX calls, Amazon calls, what you're looking to trade. Now, if we hit the top and we reject just like we did yesterday around, where was the top yesterday? Let me just see if that was yesterday or the day before. Where's the SPY? SPY 418. Yeah, it was yesterday. We hit 418.72. If you saw, you don't even have to catch the top. You don't have to catch the top at 418.72. But if you say, I know we rejected 418 on Monday, if we make it to 418 on Tuesday, I'm going into puts. Well, you should know at the top, what puts am I looking for? Okay, well, Upstart, it was overrated. I can get into SPY puts. I can get into SPX puts. I can get into Q puts. I mentioned yesterday morning pre-market. Remember, we looked at Meta. Meta was up here. The algorithm was saying it should be down here. So, and what did Meta do yesterday morning? It popped. And then what happened when the market sold off? Meta dropped and dropped and dropped. We've seen Netflix consolidate for a number of days. Again, Netflix went up to 371. Then it had a pullback to what? 351, 353 yesterday. Again, if the markets tank and we see 408, then understand Netflix will draw back even further. If you see the markets find support this morning at 411 and we pop up to 415, again, they're going to be buying the same Netflix, the same Meta that they were buying, pushing Meta to 251. So just have two scenarios in mind. Bull case, bear case. Remember, we're here to be successful traders. So the best strategy I'm giving you today is if you're only going to make one trade, why do you have to make that trade at 9:30 in the morning? You don't. Why do you have to make it at 10:30? You don't. Can you let things play out? Yes. For me today, what am I thinking? Glad you asked. I'm probably not going to trade until I hear the Fed minutes drop from last week, which will happen at 2 o'clock. I'll watch the market's reaction. How many times have I shown you guys that I don't trade until like 2:45 and the movement from 2:45 till the close or end of day, let's just even say 2:45 to 3:45, that could be a whole day's movement. You could ride the elevator in and out from this morning and all you're doing is losing IV, money from your IV. So your account is lower down even though your stock is still at the same position, the underlying derivative. So what am I going to look to do? I'm going to watch all day. I'm going to track all day. I'm going to use my micro analysis, my macro analysis, bigger picture. And at 2 o'clock, I'm going to come up with some scenarios. I'm going to see how the market plays out after Fed minutes are released. I'm going to see if there's any news or other comments on the debt ceiling. And then from 2:45 to 3:45, I'll enter one trade. I will know market direction by then. So where will I put that trade? On Discord. Where am I going right now? Discord. Now, if you want to trade earlier, Romeo's doing a live stream today at what? 10:45 a.m. And then Lotto Friday, he'll be back again at 9:15 a.m. Me, I'll be posting market updates. Just because we don't trade the market doesn't mean we're not following along. Again, if I see a great trade this morning, I'll pop right in. I'm not adverse to it. But my strategy going into today is I'm looking for the bear case scenario where we possibly test that 411 number. I'm looking for a bull case scenario where I'm really focusing on 414.87 because that's where we were rejected for 3 weeks straight. So the fact that we pulled back to 414 yesterday, it could be healthy. 412 this morning, healthy. Remember, 2 weeks ago, or what was it? Thursday and Friday, we shot up to 420 from 412. Where are we again? 412. So just eliminate those last 2 days, and we're still trading the same freaking range. So people that are shouting from the ceiling, market's going to drop by 45%, no debt ceiling. bullshit. People that are saying bull case 430, bullshit. What are we doing? We are range trading. So please understand range trading, understand entry strategy, most important, and following through. All right. Thank you for joining me. Go ahead and over to Discord. See everybody there shortly. See everybody tomorrow morning. If you like what I said, thumbs